Hello, everybody. Welcome back to Not Financial Advice. This is our fourth episode, and we are in a very interesting macro situation that's going on right now. None of what we say on this podcast is financial advice, but some of the stuff that we've observed from big tech is letting us feel that the economy is getting a little bit better. Things are getting a little bit good. Hopefully, it's not just a bear market trap. So big tech earnings, Google, Amazon, Facebook, and Apple all reported. Apple 83 billion, Google 70 billion, Amazon 121 billion, Facebook 28 billion. All of them either missed or beat very slightly, but the point is they didn't miss dramatically to the point where the market felt that tech is going down and tech kind of is the market. Sean, what were your kind of macro thoughts on big tech pretty much doing phenomenally?
Yeah, so the earnings have been good. I think the best way to describe it is better or as expected. And I think the beauty of this is that now that retail traders have really been in the market for a while and are making up a big part of the volume, actually, an increasingly large part of the volume, I think that there's a more realistic sentiment that exists out there in the real world. Back in the day, we would have to wait for the analysts to tell us what things should look like or where they should be or how they're going to fall. But now, everyone is out there. They can walk into a store and ask questions. They can see if the parking lots are full. They can check if something is trending or not, and they can get a general feel for if things are growing. Using just as an example, obviously Palantir is something that you follow really closely. You're reporting on those earnings throughout the quarter. I mean, none of us are surprised when we see the news. We've sort of known about it, right? I think what's really good too is there's been some serious concern or warning or whatever the right word might be here around this idea of like, we're going to be in a recession, things are going to be terrible. But people sort of really do forget that like we're way down already. I mean, a recession at this point doesn't necessarily mean things are terrible or crashing. The inflation's already high. We're already raising rates. We already know that share prices have plummeted largely in the tech space, especially. So I don't think it takes a whole lot to see any kind of good news as any kind of news that's not terrible news as being better than terrible. So therefore good news. And I think that this is what happens in terms of thinking about how these companies are going to market, going to market. I think there's something to be said for the fact that many of these huge companies are not operating just here. They're operating globally and they're operating in lots of different sectors and segments globally. And, it's funny, we'll see things like, AWS maybe isn't growing as fast as it should be. Well, this is natural, right? It's all based on a flow, and one layers over the other and over the other, and sometimes some lead and sometimes some lag. And I think the biggest thing that should have been a surprise to no one, frankly, is the social media stocks, right? Social media, we knew ads were going to be tough. We knew spending was going to be down. But the amazing thing about this is if these companies that are typically spending the money on these advertiser sites, that means we're going to see some cost savings, right? So like, yeah, sure, one's getting hit on ads, but the others are cutting costs and looking at margins. Well, that's a leading indicator that their earnings might be better or they're working on getting them better. So you might see some pain in the social media space, but when does that pain stop? Well, as soon as we get through earnings, right? Then that payment goes right back to flow. I think the other piece of news that we're seeing at scale too is there is no major global disruption from an earnings perspective, right?
Yeah.
Like we're not living the world we used to live in. And I think that that's the biggest change, at least from my perspective, as far as why earnings are starting to feel, I know this is going to sound silly to say on a macro show, but earnings are starting to feel less important, right? People are just tired of hearing this bull crap from analysts who can't even tell you what a stock does, by the way, and then, are telling you where it should be on a price based on nothing except for some old, outdated Excel sheet that they're using to value companies. That's sort of where my take is on it. I'm gonna just to bring this really to the macro for a second. When we go back a couple of years, we look at what happened with the Suez Canal, right, where the Suez Canal got completely blocked, and we had a ship that was essentially sitting sideways, blocking global trade. And this gets to earnings today. Funny enough, right? The minute that ship got stuck, whether it was going to be for 48 hours, for a week, or for a month, right? Everyone who was in the business of looking at the big understood that on one half of the Suez Canal were the people who were manufacturing, the producers, pulling things out of the ground, putting things together. The other half of this was delivering it to its final place. So it may take years for a problem like that to really shake itself out. And I think we're now seeing some of that finally getting back where, containers are moving again. Store shelves are fully packed again. Some items, sure, they might be tough, but we have to also remember, I'm going to speak here from an American perspective or US perspective. We went through recently this whole big thing around baby formula. But yet, if you went on Amazon and changed your location to Canada, suddenly it was all available.
Yep.
So there's a lot to be said for how much of it is location-based earnings propaganda versus really true an inability to get products that you need and when you want to get them, right? It's no different than watching Netflix in one place versus another and having access to different shows. Those same rules apply to lots of products and services as well that we don't always think about here from our perspective in the US.
So the S&P at 411 right now, when it was at 360, June 16th, if this continues, will have been the bottom. At 360, most, I guess, for JP Morgan came out, said 3,200, Goldman's. Like, did you think those predictions were crazy at the moment, or do you kind of feel like it was so low at 360, given tech stocks were oversold, that it probably was the right time to buy?
What did it do? What was the lowest point? 365 or was it
366? Yeah.
366. Okay. You got to think about it in terms of like the makeup of what's in the S&P 500, right? There's when you start seeing like 365, the last time we got into that price range was what? Mid to early 2021, right?
Yep.
Deep within COVID.
Yep.
It's hard for me as a reasonably intelligent person to think that just because we might see maybe a slowdown in earnings, or maybe not blowing earnings out even, that somehow we should be at the same place as when we shut the economy down.
Yeah.
It's hard for me to justify that at a large scale perspective, that in a global pandemic recession, that is just as bad. Like, that is bad. But somehow, like, maybe earnings are a little bit off. That should be equally bad. It seems silly to me. But the beauty of this is, for anyone who understands, of course, S&P is not equal weighted, right?
Yeah.
So it does tend to be heavily weighted to the top stocks. Those typically are going to be tech stocks, and we're going to experience that downward play. I don't typically talk about how I play this, but I'm going to do it right now. I'm going to break myself a little bit here because, again, this is not financial advice. But over the past couple of weeks, I've really been eyeing TQQQ, right? Because I really see this thing down. And I saw this down to the 20s. I did a video where I was saying how I was selling puts on this and building a big position. I've been doing this over the past year or so by selling puts. And I have a very, very sizable position now, like very sizable, where if we start to see this market go back into the right direction, these tech stocks start to really raise, I'm potentially looking at like seriously large mid six-figure range profits on this.
And the reason for this is because QQQ is the weighted tech index.
It's NASDAQ, right? It's really the NASDAQ. Yep.
But triple QQQ, TQQ means it's. Can you explain what that means?
I would love to explain it. So when you buy QQQ, you're essentially buying, that representation of a share of how the market moves 1-to-1, right? Sometimes a slight deviation, but essentially 1-to-1. The reason why TQQQ, number one, should not be used by regular investors, should be someone who's very experienced, has access to a large degree of margin, and understands risk mitigation and holding the position, is it's called a leveraged ETF. What makes it leveraged is it is moving at 3 times the directionality of the underlying asset class. So if if NASDAQ goes way down by 30%, I'm going to go down 3x that potentially. Right now, of course, it's not always 100% aligned that way, but the risks are huge. You might say to yourself, like, well, look, obviously QQQ is never going to go to zero. Well, TQQ could, in theory, go to zero. You could lose everything.
Why? Because if QQQ doesn't go to zero, why would TQQ?
Because there's only so much room for it to keep tripling those losses down.
Right.
Yeah.
Right.
Yeah. So it's essentially has margin built into it, and people typically hold it on margin as well.
So NASDAQ going down 30% means you go down theoretically 90%, and you can't keep going down 90%.
Theoretically, yeah. It doesn't exactly work that way, but that is the idea. The moves, like a 1% move would be a 3% move.
Right.
So it's important to look at it from that perspective. Now, the nice thing about that is, same as the SPY, there are points where you can look at it, you can understand the core value of the holdings within it, and make educated guesses based on where it should be. It means that people who are used to doing pure technical analysis, you can look at that kind of position, but it's tough in a time of earnings, and it's tough in a time of a potential recession, which is, as we've learned recently, means different things for different people in office. But this is one of those ones where if you just understand that these major holdings within the NASDAQ are all getting pummeled, and there's only so much further they can go. I know that a lot of people might hear that and say like, wow, what an idiot. Everything can always go lower. And you're not wrong. They wouldn't be wrong. But there is a certain degree of being reasonable in the way you hold these positions to understand what that risk could be. So for me, once I saw that drop down to the 20s, that was my version of SPY being in the 360s. That was an all-in moment. So, I'm averaged in there around 25 a share. I'm actually going to look right now because I don't know off the top of my head what it is. I tend to not make it a habit to look at stocks during the day. I just want to give you a real number here just as an example. And I want to talk about how this piles into all this. So it's at 33.21. So that's a pretty significant return already in just really a short period of time, but I'm going to hold that for a while. The reason why I feel comfortable getting to those positions, and the reason why I don't mind something that's leveraged and I'll lever it more myself on my end, is because I'm not like pulling this out of thin air, right? Like I'm looking at the holdings of NASDAQ. I'm looking at the way they've moved and how much they've been hurt. And I'm also looking to understand what further downside could exist, right? We know that Amazon or Google or anyone else for that matter are mega companies, right? And they are not going anywhere. And at the same time, right, like when you think about big tech names, you might think about Meta, but Meta doesn't trade on NASDAQ. It trades on the New York Stock Exchange, right?
Yeah.
So, it's like, there's my biggest risk. That isn't even a risk in this portfolio. So
Yeah.
that's just my call out there. I don't normally talk about individual stocks or holdings or ETFs, but there are moments when you have to really realize like, where is the opportunity and is it an opportunity of a decade? And for me, with that in the 20s, that was a decade opportunity.
Right.
What I think is also interesting too is there can be this bit of capitulation that happens where there's a fundamental misunderstanding of which companies are likely to get the biggest beat down, right? I think we've talked about this before, but this is a great conversation that flows into earnings as well, is as private equity and VC and sort of what I would call like middle market business development firms are sort of slowing their deals down, slowing the pace of investment. That's only hurting the companies on the small side. That means all that much more opportunity going to the companies on the big side, right? Like Google's not worried about raising capital to operate, right? No one else at the top end is, excuse me. So it's considerations there from the perspective of if everyone else isn't spending money, then they got to put their money somewhere, and that's where they end up putting it. I want to actually get an answer from you on something. One of the biggest surprises coming out of Amazon, I thought, was their ads and the amount of money they're making. I'd love to get your take on
$8 billion.
that. Yeah, talk to us about that, Amit. I mean, what do you think about that? I'm not saying I was surprised, but the number was surprising.
I saw this kind of coming because last quarter, I think that they put up 7 billion or something, which was insane to me. Last year, sorry. So last year they put up 30 billion in ads. And I was like, okay, Facebook puts 30 billion in ads a quarter. Amazon's putting 30 billion in ads a year, but it's only ads and they have AWS. And so I was like, okay, this is interesting. So when I think about ads on Amazon, I'm like, it's a search engine for products, and it's a much more effective search engine for products than Google, because I go to Amazon to search for something expecting to buy. Google, I search something and we'll see what comes up. And Google is pretty effective. But on Amazon, I know what I want to buy. So those sponsored links are just everything. We know the third-party sellers, if you can't compete through Prime shipping with 2-day shipping, you have to go through Amazon, because that's consumers are not going to wait 2 weeks unless it's a really niche item on the internet. And even then you can find that stuff on Amazon. So if products have to go through Amazon has to take a fee of all those products that are going there. Amazon controls the end-to-end supply chains of it with FBA. Then why wouldn't they make a crap ton of money off ads? I mean, why wouldn't people advertise their products on Amazon?
I agree, and it's actually, I think though, I want to tease one string out of all this. Is when we think about ads, we think about social media, we think about Google search, we think about potentially all these other sites that might use ads, even blogs, right?
Yep.
But to think that people are spending so much time on Amazon between all the things they offer, which, my God, it's everything. That to me was the one string in the pile of 1,000 that like I was drawn to right off the bat, which was, again, I'm already there to shop, and I'm getting advertised during my shopping experience.
Yeah.
And just how brilliant that is, that I'm already in the motion of spending money. So spending a little bit more is amazing. In in the realm of analytics that I work in what we call like embedded contextual or workflow based analytics, where you kick off processes automatically, generate predictive and narrative understanding of data, which leads to prescriptive insights into what to do with your data. This is exactly the same way that they're really thinking about it, which is, Amit's looking for a pair of shoes. He's going to probably need some socks with those. He may not know that yet. And this person's going to bid the most for that ad. It's a guaranteed 1-to-1. It's brilliant.
Yeah.
There's very few other experiences where you can take the actions I'm looking at and directly tie them to the effort that you're currently going through in a checkout. I mean, it's absolutely brilliant at the source marketing, right? Like, you think about how many times in the past we've walked into a store and they've got, I don't know, stuff up on the counter, like the impulse buys, but it's crap, right?
Yeah.
Like, you're buying a pair of shoes, you're not buying some chapstick with it, but that's what they've got at the counter. But if I'm checking out a pair of Jordans and I want to get some socks to go with it, the perfect time is to hit me right when I'm about to go to checkout.
Right.
And that access to the workflow, that access to the contextual workflow in checkout is what drives that massive value. Like you said it a moment ago, I can't operate a store if I'm not selling on Amazon because I can't compete at all. And I also know that I can't win if I don't pay for advertising. So I have to let them eat my margins. But that's okay because they're going to guarantee a certain amount of sales for me by the pure definition of being within the workflow and the contextual aspect of that buying process.
Along with Prime Video has ads. I mean,
I was going to go there too. We don't watch a ton of stuff on Prime in my house. We have it, of course, but like every so often there's a couple of shows we turn on, and I think about that same thing too. Like, it's just the constant drive back. It's the constant drive to what I'm going to do, and it just keeps me on their platform. Again, this is a topic I know well, but not a lot of people do. I was really looking at the algorithm in YouTube the other day. And really, let's be honest, it's not really an algorithm. It's just a recommendation engine. But what works so well with it is it understands session-based watching, right? So you might go on YouTube 5 times per day, but each individual time you come on is a new session. Their goal is like, how do I ensure that you are staying on the platform for as long as possible? And they do it by recommending similar or like-minded content within, the workspace that you're already in. I know you know all this, but just for anyone who's not aware of that. And it's great because what that means is for the advertisers, it's a bang for the buck. I'm going to watch 10 finance videos in a row. Well, Liberty Mutual is going to advertise, and then FTX is going to advertise, and then whoever else is going to advertise, right? Name your financial insurance company. And it just speaks to the fact that like it's so fine-tuned to understand what we want to do that even getting out of this very tactical individual purchasing at a checkout, it scales all the way back and out to understanding why factories plan 2 years ahead of time, and why 4 years ahead of time material sources are planning, and why 8 years ahead of time shipping companies have already leased out contracts. And so there's something to be said for knowing how that process works and how it applies to earnings, to advertising, to what goes in front of you at the moment of a sale.
And that speaks to Google, right? Transitioning to Google.
Exactly.
70 billion in 90 days. Absolutely crazy. 69 points.
This is like watching the future happening now. Like money that I want you to finish your point, but I had to call this out.
No, go ahead.
That's like imaginary money, right? 30 years ago, something like that, it would have been like, you might as well say a bajillion, right? It wouldn't have mattered. It's an impossible number.
Even more to the simulation, it was 69.69 billion, literally.
Of course. We're living in the simulation. Yep. We're in the bubble they let us live in.
So Google Cloud did 6.2 billion, YouTube did 7.3 billion, and then the rest, 95% of it, came from that thing you search in the box. Is Google the most vertically integrated, phenomenal business of our lifetimes?
Let me ask you a question. When was the last time? Do you use Gmail?
I do. Yep.
When was the last time you went and opened up the little box to look at all of the services you have access to?
Are you talking about the promotions and ads they have?
No. Like if you are just at your if you're at the Google homepage, let me just do it myself right now.
Oh, I know what you're talking about with Drive and Calendar and.
Yep. Like just it's absolutely insane when I think about like all of the products that I can access on Google. This list is massive.
I'll share it right now. So
okay. I mean, like I actually clicked on it by accident the other day.
YouTube, Play, Meet, Gmail, News, Maps, Chat, Context, Drive, Photos. I pay $1.99 a month for Drive.
Yep,
Translate,
exactly right.
Calendar, Duo, Shopping,
and
Docs,
it's
Finance.
It's way more, right? It just keeps going.
There's a lot. There is a lot.
And this isn't even everything. You can actually expand this further. I won't make you do that. But like my point simply in saying this is they've got there you go. If you scroll down on this page, wait till you see this, like browse all products there.
There we go. Wow.
I mean, these are things people don't even realize they have access to. Look at this. I mean, Waze is in there.
I forgot they bought Waze. YouTube VR. We're getting VR for YouTube soon.
Look at all this, right? Like this is the kind of stuff they've got going on that people don't even realize is in there. And this is purely just on the simple Google Suite version of Google, not the integrated full-blown versions. Like if you spend any time down below, if you click for business, it may not bring you to where I think it's going to. Oh, for developers, I'm sorry, but you can go to that after. Look at all this just for business, right? And then you go scroll down one more time and do for developers. I mean, like this is an insane amount of stuff here that's all just integrated into the platform easily from one homepage. So This doesn't take into account all the cutting edge, the moonshots, the other partnerships they have, the unknown products that we're not talking about on here. So your question was, do I think Google is just the mega tech company? Yeah. I mean, again, I'm going to call this out for the sake of just being obvious to our podcast here. Like this is definitely not financial advice, but I'll tell you what, Google is pretty darn amazing. I mean, like
Google or Facebook, which one are you buying? Most people on the podcast will say Google because most people on my channel don't like Facebook, but
yeah, I think Facebook's reputation, Zuckerberg, the way he eats himself.
Yeah.
Right. He has enemies by default. He built his business creating enemies. The only thing I'll say is this: if, and it is a wildly humongous if he can execute on the metaverse and monetize and build that and get an audience to look at it, I think that could propel them into a level of revenue we have yet seen. I'm saying that though with a ton of concern of if he can make it happen, if it will be allowed to happen, if regulators will let him acquire what he needs to make that happen.
Yeah, they blocked one of the things he was trying to buy this weekend.
Just recently,
right?
Yep. Yeah, just recently. And the reason why people hate it, and I did a short video on the metaverse the other day and sort of what people are calling within it. I get why people hate it because it represents a whole new global economy that's unlike anything we've seen before. But I'll argue this. If I go online and say the blockchain is dead, the crypto's dead, it's the end of the cryptoverse, 1,000 people will attack me within 5 minutes with all the different reasons why. Most of it's going to be repetitive, but it's good. They're going to tell me, I don't understand it. I don't get it. I know nothing about it. Fine. But those same people don't see the metaverse as an entire new platform for gaming, for fitness, for entertainment, for planning, for getting together with people, for viewing sports. I mean, I know this is like a super easy example, but like, I just think about like how easy it would be instead of watching, the Celtics on TV, you set up a little camera right at courtside and get the courtside experience and the sound experience. And like, yeah, I get it. Right now, we're not there yet. Right now, the headset's too big and heavy and gives you headaches or makes your eyes, go back and forth in your head. That said, though, if they can execute on it, there is a ton of money. There's a ton of value. There's quite literally no known. When you can build your own resources in an imaginary world, there is no known limitations or boundaries to it.
Yeah.
Now, I'm not saying that I'm ultra bullish here because I'm actually not, but from an asymmetrical return perspective, Google is going to be around for a long time. It's an amazing investment. They're crushing everything that they do. They don't have the same kind of legal issues. They don't have the public issues. They have some, sure, but they're a major company. They all do. That's a growth machine. That's a growth engine, right? And I love them for what they do. But if Zuck and team can execute on the metaverse, to me, that represents a level of asymmetrical return that maybe we've never seen before.
Because I don't know think there are trillions of dollars in the metaverse, essentially.
I think that the metaverse is almost, in one sense, it scares me. It's like the Terminator. It's like a dystopian world of like, I can escape my reality by being in this different place. From purely an investment and money perspective, which is how we're looking at things, I think there's no knowing how much money could be in there. I think there's going to be an ecosystem of jobs. I think there's going to be an ecosystem of goods and services. I think there's going to be have transactions. And I think it's going to take a handful of major players to jump on board. What I would share is this. I feel bad because I forget the guy's name. Excuse me. The CEO of Roblox did a great interview on Bloomberg a couple months back. Really good interview. I've watched it 3 times actually. And he's really talking about how Roblox really already represents a sort of metaverse, right? You have your character, you can use different skins. They have their own currency already. But my kids use Roblox.
Yep.
I will go down and far around on it and try to figure out what the games do and stuff. And like, it's easy to stand back and say like, well, it's kind of stupid. But they make a ton of money, have great margins, and they're growing like crazy. They have pretty decent moderation. They're sort of getting their arms around what it takes to have this separate sort of world going. They have for a while. They've gotten good at it. I know we talked about this before. Fortnite, same kind of thing. I think there is an almost natural but enormous barrier to moving from gaming to everything else, right? Like watching TV and sports, doing the fitness stuff, all that kind of stuff, right? I mean, Lord knows, like, I'm sure like OnlyFans and the rest of the adult business is dying to get the metaverse going. And I think athletics and music and everything else is probably too.
Speaking of Facebook, I mean, I don't know how much you've seen of this, but Adam Mosseri, the head of CEO of Instagram, basically came out and said, we are going to be more algorithmically recommending content versus social graph recommending like they've done for the past 10 years. So Zuck said right now, AI recommendations in the feed of Insta and Facebook Reels in particular, that they made $1 billion off of from inception to date, is 15% of people's feed. And by the end of the year, they want to make it 30%. And as soon as they said that, Kylie Jenner, who has 340 million followers on the platform, Instagram in her story, make Instagram again. Don't make it like TikTok. And now the reason she's saying this, obviously, you got to look between the lines, is if Instagram turns into an algorithmic machine like TikTok, anyone can get discovered, which means the barrier to entry is minimal. And the 340 million followers she has, that level of expertise or that level of aheadness that she has just goes away because anyone can get discovered in the feed. Whereas if Instagram stays the same, then she's going to get more reach. So Adam Mosseri walked back his comments and he said, look, we're going to work on it. We're not immediately going to transition to video.
Yeah.
What are your thoughts on Instagram becoming TikTok? And does it signal that TikTok's just eating their lunch? And if the metaverse doesn't work out and Instagram doesn't work out, this is a Yahoo.
Yeah, this is MySpace, right? Like,
yeah.
The problem is, let me pose a question. You know me and my Dunkin' Donuts investment and how it got from Charlie, I can't remember, D something or other on
Charlie
TikTok.
D'Amelio. Yeah.
Yep. Let me ask you a real question. Without TikTok, is Charlie D'Amelio famous millionaire?
No.
Okay, why?
Well, she wouldn't have got discovered on
That's
Instagram.
right. Great. And of course, if anyone knows this, it's you. I count you as the number one expertise on getting discovered. And I mean that in a serious way. So I think about that and think about how she's made money by doing this. She's gotten sponsorships. She's been on Dunkin' Donuts ads. And now I think her sister, I don't know who's older or younger or whatever, but has a sister now who's pretty popular as well.
Yep.
And I think about how the Kardashians have been on this get rich and famous path for a very long time, going back to being an assistant to Paris Hilton.
Almost 2 decades,
yeah, exactly. Leaking videos, doing Playboy, then releasing the shows and then their own product and brands, all the way to where we are today. And I would almost ask this: is there any differentiated value between what Charlie, who I think is a teenager, gives her fans versus the 340 million followers of Jenner? What is the actual difference? Anything?
It's just entertainment at the end of the day.
Just entertainment. So Mr. Beast, right, just passed 100 million followers on YouTube, right?
Yep.
I would argue that his stuff is much more engaging, much more interesting, much more entertaining than both of them, but they have much bigger audiences, or maybe Charlie has close. And I think it speaks to the fact that the world of the celebrity who does nothing and is actually quite boring in reality, they can't be rich and famous while offering absolutely no intelligence whatsoever to the platform, nothing interesting to say or do. I've seen like magazine interviews with them on TV where it's been the most like boring, nothing of value comes out at all.
Yeah.
And I think they've done a great job of turning their name into a business, but they've done it because of social media. And I think about the people who are their fans and they don't have true interactions with them. They're just eating up this stuff. They're buying their products, but they're full of plastic. They're not real, right?
Yes.
And I look at this and I'm like, they're their own products of their own products. And these fans they're going to follow them. They're super fans. They love what they see on there from that discovery perspective. But there'll be another one soon. Maybe not yet, but there's going to be another one. Maybe it's you, but people are going to follow that next person and forget about that other person. The beauty of the TikTok style and the way that is recommended and discovered is it's very hard to manipulate that.
Yeah. It's meritocratic at scale.
It is meritocratic, at least for now. Now. But to that point exactly, if I've got $1 million to spend, right, and I want to be famous on Instagram, there's absolutely no doubt that I could be famous on Instagram by the end of the year if I had a humongous budget to advertise. People look at Andrew Tate, right? I know Andrew Tate I was a boxer. I know him from kickboxing, but I see him. I didn't even realize he was all over the internet. And now he's this character that he's playing that's not the guy I've seen before for years.
Yep.
And it's just Dan Bilzerian 2.0.
Yep.
Right.
Yep.
It's all about how can I get a cash grab and a money grab and move on to the next thing. And all the while, not to jump totally to a different topic, but I wanted to mention this as part of sort of the theme of our show. We've got discovery issues on TikTok, how TikTok's doing great for that perspective. We've got Facebook is either dying or asymmetrically returning. We've got Instagram sort of fizzling out, a little bit boring. People are tired of just looking at pictures. All of this is going on, and everyone's talking about who the next socialite that provides zero value is going to be, or who's going to do a stupid dance move for 18 seconds. And right now, from a global perspective, we have China quite literally threatening to shoot down US politicians if they go to Taiwan.
Yes.
Literally threatening that they're going to attack us if we go there. And the rippling effects across our globe, if a missile so much is left the chamber of a defense setup overseas, the absolute insanity that would ensue from an economic perspective, a political perspective, potentially war, God forbid. And we're literally, most of the news we're hearing about, to your point, man, is, who's the most popular TikToker, right? Who's 300 million followers. And the reality is we've got Biden and his entire team trying to deal with what's going to happen with Taiwan. We don't even know if Pelosi's really going to go yet, right? We know that it has everyone literally preparing for the worst. And China now is in a position where they have to double down and say to themselves, I'm going to bring this back to TikTok in a second. China's literally has no choice but to double down on this because they're backing Russia for going after the Ukraine. They know Russia's going to back them when they go after Taiwan. And I think you'll note when they go after Taiwan, because it's going to happen, I think. And any talk about earnings or recessions or slowdowns in products or getting access to baby food, that stuff's out the window. I mean, forget about it. Like, they've already stopped taking trash and recycling.
Yeah.
They already are cutting the way we do business together. We're cutting their stocks off our stock exchange. They're not allowing us to get access into their markets and into their capital markets. And they're threatening now to shoot down our planes if we go and visit countries that are independent of them, but clearly they don't think that they are. And the irony of all of this, as we're talking about TikTok being the number one place to see, feel, experience, yada, 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 that's a Chinese company with all the data. Love it, hate it, indifferent. I think bigger than that, so whatever. But I look at the full circle here of the propaganda, and propaganda isn't always global propaganda at a government, political, economic level is not sheets of paper falling from the sky that says the US is evil or China's evil. Modern day propaganda is getting people away from news and reality and into a world of
escapism.
That's a perfect description.
Thank you. I appreciate it.
You're welcome. And that's also a really great word for how I was thinking about metaverse a few minutes ago. Is the opportunity is massive as an investor, as someone who can make money in it, as someone who maybe wants to build a business in it, right? But damn, I mean, it's just more separation from reality and the risks of what's going on in the world. We're having protests over here every day. I say over here in the US, right? Over a different topic every single week. I'm not saying any of them do or don't matter, right? I'm a firm believer, and you should believe what you believe in and believe in it all the freaking way. Be convicted to what you want to believe in. Well, while we fight ourselves, while we fight about technology, while we fight about this, that, and the other thing, we have a unified global force out there. I don't know if it was our first pod or our second pod, but we were talking about sort of this pie effect of the US, Russia, and China, and how they're always ebbing and flowing in power. But what happens is when there's unified front and Russia and China combine, that offers a major problem for us in the way we have to support our allies, support the world, support overall economic efforts across the globe.
So let's end on this. Why is Pelosi even thinking of Taiwan? Why would we?
I'm going to be very honest with you. I don't know why she would go there. I don't know what she's doing, even talking about going there. This is an elderly person who clearly should not still be in a role that they're in. Has no business going to Taiwan. No one's asking her to go to Taiwan. There's no reason for her to go to Taiwan.
She went to Singapore today, and rumors are she's going to Taiwan.
Of course. And you know what? I wouldn't be surprised if she's there right now. But the fear that I have is that, to me, I'm sorry, this is a political stunt. Okay. Like, there's absolutely no reason why Taiwan's leadership couldn't have come to Singapore.
Right.
Or anywhere else for that matter. Right. I want you to think back for a second here to what we've talked about in only 4 episodes. Conflicts around the world, affecting food around the world, affecting services and goods around the world, affecting people around the world. Okay, we know that already. The ebb and flow of power amongst the 3 major powers that exist today. Okay, we know that. Then you've got Biden with this stupid fist bump nonsense and showing, in my opinion, weakness. This has nothing to do with him or Democrats or Republicans. This is a particular instance of, like, I said I'm not going to do it, so I found a weird way to not do it, but still did it.
Yeah.
We're dealing with that, and now Pelosi is just going to go to Taiwan. No, listen, we can show our support in 10,000 different ways that don't involve putting the 3rd person in line to be president on a plane with threats of being shot down. It serves absolutely no real purpose. Now, we had talked about this previously, how we give money to Ukraine because it helps us in that region, helps with oil, wheat, etc. Right? This is Nancy Pelosi, who is currently being lambasted for her husband making even more money off of clearly inside information. I'm not causing no accusations, just saying. And I look at this and I'm like, what is the outcome of that person getting on that plane and going there? And the answer is nothing. It is a political stunt and a string of political stunts that do nothing for an American in this country. Nothing. And for Americans in countries over there, it puts them in danger. So I don't get it. I don't get the move. I don't see the point behind it. Now, I'm not saying we don't send our Navy into right outside the waters. Maybe we throw a couple aircraft carriers out there, and they're already there, by the way. But we've already said we're going to continue and amplify military drills with South Korea. I don't know if everyone follows this stuff. I hope they do. But we've already come out and said, not only are we moving forward with drills with South Korea, we're going to do more than normal. We're really going to do a lot of military drills right outside China. This serves nothing. What I think it is, if I had to guess, and this is, I'm not a poli-sci guy, but what it feels like to me is, I'll do whatever I want and you'll do nothing. And China knows they probably can't do anything, but at the same time, if they don't do anything, then they've already lost.
Yeah.
So it's brinksmanship in modern immaturity, in my opinion. I know everyone can watch this and have a different opinion about that, but to me, we're talking about scales that are so much bigger, so much more important. That I'll end with this, because you know me, man. I'll talk literally all night. We are in a point where we are so separated at home that we are separated overseas, and we're separated amongst our peers and our allies, and I don't think enemies is the right word for a modern world, but let's just say our less friendly nations are more aligned with each other than ever, because there's such a huge sign of weakness, right? Like, we have fighting with, our 2 parties. The UK is fighting within their own parties.
Yep.
And there's just no sense of continuity and vision in the Western world. So the Eastern world is like, cool, we're going to start to take the countries back that we gave to you years ago. Those are ours again. It started with Hong Kong. Now it's going to be Taiwan. It started with, I feel so bad, Crimea. Now it's Ukraine. And little by little, they're expanding those territories again and taking back what they wanted. And we're over here fighting about, like, is the wall finished or is it not finished? Are we going to fly over there or not fly over there? It's like, oh my God.
Can I get famous on TikTok or can I not?
Yeah, well, that's a whole nother thing. But yeah, I mean, that's a good point to leave it on, is like, as we talk about earnings in the larger scale and the global perspective, man, it's just understanding the root cause analysis. That's the one theme of this entire show, is everything is about baseline root cause analysis, whether it's Pelosi or China or earnings at Google. It's about root cause analysis and how to trace it back to where that's coming from. Let me ask you a question before we cut it, though.
Okay.
How's things going at the startup?
Things are kind of crazy. We launched it. We raised about 70 grand in the past 6 days. It's absolutely insane. From investments from $200 to $100 to 5,000 to 3,000. It's just a bunch of people, messaging me saying, "Hey, we believe in you. We're taking a shot on you." And the cool thing is, after you make the investment or right before you press confirm, there's a big disclaimer that's like, I can afford to lose this money. I can't like startups are risky. It's like WeFunder, the platform, it does a really good job saying, hey, before you press yes, you got to know this is risky. And to know that 100 people across the world made that decision, it means a lot. It is a bit scary. I'm not going to lie, being vulnerable. I mean, it is very like, it's just like, oh shit. Like we worked the whole 2 years to get to this point, and now we get to this point, and money was the obstacle. Getting my name out there was the obstacle to get the money. That was resolved in the past year and a half. Now the obstacle is go for it. And it's just a whole different world, a whole different level of stress, a whole different level of intimidation. But it's exciting, and we're going to see what we can do.
Force multiplication, man. I've been watching it. I'm watching these things hit. And I saw your post today too, where you said specifically, you launched over a year ago to people who didn't care, didn't pay attention, and could care less. And I think that is a lesson that needs to be shared over and over and over again, is that this is not, if you build it, they will come. It does not work. So anyways, with that, I just want to say, obviously everything looks awesome so far. So looking forward to seeing more on that front.
All right. Thank you, Sean. It was a good podcast. Hope everyone enjoyed. We'll see you guys next week on Not Financial Advice.
See you, everybody.